Are you a business owner looking to save massive amounts on your taxes? Then this video is for you. Hey guys, my name's Danae Wolf. I'm a financial clarity coach and a profit strategist. I help entrepreneurs increase profits and decrease stress through financial education. Today, I am diving into the #1 tax loophole when it comes to saving money on your taxes. So if you're a business owner and you own your primary residence and you're looking to pay Uncle Sam less, you have got to watch this video. If you want more videos like this, please like and subscribe to my channel. So what is this massive tax savings loophole I'm talking about? Well, it's called the Augusta Rule, also known as Section 280A of the IRS tax code. And the reason why it's such a great loophole is because #1, it's perfectly legal. And #2, it's very easy to claim. All you need to do is be a business owner who also owns your primary residence, which means that your name must literally be on the deed. So this won't work if you live with your roommate and maybe they're the ones who own the home, or you live with your parents or a family member. Your name has to literally be on the documentation as an owner of the home in order for this to work. So if that's you, stay tuned. Now, before we dive into exactly how the Augusta Rule can save you thousands on your taxes, I want to give you a brief history of what exactly the Augusta Rule is. So the Augusta Rule started in, as you probably guessed, Augusta, Georgia. The residents of that town were renting out their homes to visitors coming to Augusta for the Masters Golf Tournament. Now, fun fact. When I first started studying the Augusta Rule, I told my husband it was for some golf game in Augusta. And he was like, you mean the Masters? And that was the day I realized that the Masters is sort of like the Super Bowl of golf. So to all the golf fans out there, sorry that I was so naive. So what happened is in the 70s, people were flocking to Augusta, Georgia, because unlike me, they were aware that the Masters is a pretty big deal. There were so many people coming to town that there weren't enough hotel rooms. So residents of the town started Airbnb-ing their houses way before Airbnb was a thing. And they started the process of lobbying the government to say, hey, we're willing to rent out our homes, but we're not willing to pay tax on that rental income. And after some time, the government said yes. And what you do for one, you must do for all. So the IRS ended up implementing this rule across every state in the nation. So thanks to the residents of Georgia, we now have tax code section 280A, which states that a homeowner can rent out their primary residence for 14 days or less without having to report the rental income on their tax return. So what exactly does this mean for you as a business owner? Well, it means that your business can rent your home from you, and you can collect that check, deposit in your bank account without having to worry about taxes. Now, on the flip side, from your business's perspective, your business is going to get a legitimate tax deduction. So that expense for renting out a space will go onto your books as a business expense, therefore reducing the profit of your business, therefore reducing your taxable income, therefore reducing your tax bill. This is why the Augusta Rule is such a big deal. You're going to be reducing your taxable income of your business, increasing your personal income, and you won't owe taxes on it. This is a win-win, guys. But here's the thing. I want you to be able to utilize this incredible tax loophole, but I want you to do it the right way. By the time you get off this video, I want you to feel comfortable and confident taking advantage of this deduction. So today, I am going to teach you everything you need to know in order to be able to utilize the Augusta Rule in your business with integrity. It is my hope that you will be able to speak to your tax preparer and CPA and demonstrate to them that you have done your due diligence and that you are aware of how this rule works and that you are implementing it properly in your tax strategy. So let's get started with the main rules you need to know about this law. The first thing I want you to know is that it is 14 days or less, which means that if you only need to rent a space for your business for one day, that's okay. Being able to claim this for one day is better than claiming it for 0 days. So you can do any number from 1 to 14. However, do not go over 14 because anything over 14 will create a taxable event for you. And that's not what we're looking to do. We are looking to do this in order to save money on our taxes, not increase them. So make sure that you fully understand that this is 14 days or less. The other point I want you to know is that this does not interfere with your home office deduction. They are two very separate sections of the tax code, and nowhere does it state that you cannot take them in conjunction with one another. So if your tax preparer challenges you on that, I challenge them back and ask where it states in the tax code that you cannot take both. Because remember, your home office deduction is for the day-to-day business operations of your company that you are doing on a regular basis. Renting out a space for something in your business is not an everyday occurrence. So the two items are completely different. Which brings me to the next rule that you should be aware of. You must be renting out your home to your business for a legitimate business reason. You cannot just make this up, guys, okay? We want to do everything by the book. Remember what I said. We're going to be claiming this with integrity. So why would a business need to rent a space? Well, everyone's business is different, but I want to teach you some common reasons why a company might need an event rental space. For example, you might be hosting some type of networking event for clients. You might be hosting a team building event with your team, or maybe even training members of your team. Or you could be filming a brand new online course and be in need of a backdrop space to do it, and you don't want to do it in your regular home office. Perhaps you're doing a branding photo shoot. Instead of scoping out your town looking for that perfect backdrop for your business event or photo shoot or training, look at your home. Where are the spaces available in your home that would work? So the very first thing you're going to do is determine the needs of your business and figure out what you would need a rental space for. The next rule that you need to be aware of is that you must rent your home for a reasonable price, okay? We're not going to be able to say that we spent $50,000 for 1 day's rental in our home. That's not going to fly. You need to make sure that you are renting at fair market value. So this is when you're going to have to do your homework and make sure that you are paying rent that makes sense. And the final rule that the IRS makes is that you must issue a 1099 from your business to yourself if you paid yourself more than $600 for the year in rental income. It will be Form 1099 MISC, and you will have to do that. I know it sounds a little silly for you to send a 1099 to yourself, but that is all a part of this ruling, and I want you guys to do this by the book. Okay, so now that we've talked about what the IRS says the rules are, I want to walk you through the exact steps that you are going to take to make sure that you are ironclad if you were to get audited. I want to make sure that you go into this feeling absolutely confident that if you get audited, you have everything you need in order to prove to the government that you did this the right way. So let's get into each step and break them down. Step one is to determine your legitimate business reason that you are renting your home. And what I want you to do is document it. You guys are going to realize that in each of these steps, the key word will be documentation. We are going to need a paper trail of everything. So what you're going to do is sit down and look at your business and the needs of it and think, what would be going on in my business this year that would make it necessary for me to rent a space? Identify all of those dates, document all of them, and notate what you will be doing at each of these meetings. Now, when I say document, I don't want you to get in a tizzy about this, okay? It's pretty simple. We can go ahead and simply put this in Google Drive and save it in a Google Doc. But the point is, your first step is to determine the legitimate business reason why you need to rent your home from yourself and document it. For each of the dates that you are going to be claiming this, I want you to have documentation as to what is going on in your business. I'm not saying that you have to have meetings with minutes where somebody is literally sitting in the corner transcribing everything that's being said. But I am saying that whether it's a meeting or an event or a class, whatever it is you're doing in your home, there's got to be notation on it. The second thing I want you to do is do your homework. You have got to make sure that you are charging your business a reasonable rent. So I want you to go through all of the listings you can find in your local area that are comparable to your home. What do I mean by comparable? Well, if you have a 2-bedroom home, you certainly don't want to look at a 6-bedroom home's listing as a comp. You want to look at other homes that mirror yours in your area and see what they are renting for on Airbnb or VRBO. You can also take a look at the local hotels in your area and see what they would rent in order for you to reserve a conference room to have your business events there. Then I want you to gather all of that homework that you did and save it in that Google Drive. This way, if you get audited, you can say, I decided to charge my business $1,000 per day to rent out my home. And here is all of the documentation I have proving that that is a reasonable rate. The third thing I want you to do is create an invoice. I know it sounds silly to send an invoice from yourself to your business, but guys, we want to do this by the book. And the reality is, if your business was renting a space to host something, they would get an invoice that they'd have to pay. So I want you to generate an invoice from yourself and send it to your business. Make sure that the description lists what the invoice is for, which is of course going to be to rent your home. Now, I personally love creating invoices in QuickBooks Online. Now, if QuickBooks Online just isn't quick enough for you, if you have a lot of struggles with it, I strongly suggest you check out my signature program, Profit Perfect Academy. Inside of that, I have dozens and dozens of QuickBooks Online tutorials. They're all located in the tech library. And within the Academy, we do weekly Zoom meetings so that you can hop on face-to-face with me and ask me any questions you might have. So if you're in a place where you're really ready to increase your profits and decrease your stress by learning what you need to know about small business accounting and taxes, definitely check out Profit Perfect. I'll link it below. But if you're not quite ready yet and you're not ready to dive into QuickBooks Online, you can create this invoice just with a Google Doc or Microsoft Word, but you want to make sure that you do take the time to create the invoice and send it from yourself to your company. Because remember, it's you as a person renting out your personal primary residence to your company. The next thing you're going to do is your business is going to write a check to you. Now, most of you probably have it set up where your company is able to transfer funds from your business checking account to your personal checking account. And typically that absolutely works when you're taking an owner's draw. But when it comes to the Augusta Rule and making sure that we're doing everything by the book and going above and beyond to be able to prove the legitimacy of this tax deduction, I'd like you to take the extra step and write a check, because we want to have documentation, right? That's the word of the hour. Let's make sure we have as much documentation as possible. So we're going to write a check from our business to ourselves for the rental space. And the fifth and final step that you need to do in order to make sure that you have claimed the Augusta Rule with integrity in your company is to file a 1099 MISC. So if you were to pay someone in your business more than $600 per year to rent a space, you would have had to 1099 them. Just because the person you rented the space from happens to be you doesn't mean we're going to skip that step. We want to be by the book. So if you end up renting your home from yourself and pay yourself more than $600 for the year, you're going to have your company issue a 1099 MISC to yourself. Now, I want to be clear. If you receive that 1099 to yourself because you did in fact receive more than $600 from your company, you don't need to worry that it's going to trigger a tax event. You will let your tax preparer know that I am claiming this income under the Augusta Rule. Therefore, I do not have to claim it. So you won't have to worry about anything like that happening. We're really just issuing the 1099 to prove that it is business as usual, that your business is treating this expense as it would treat any other of its business expenses. And there you have it, guys. Those are the IRS rules that you need to know about the Augusta Rule and the 5 steps that you need to take in order to make sure that you are claiming this deduction responsibly. I hope that this helped. And if you have more questions about the Augusta Rule or any other type of tax strategy, you can find me over on Instagram at the Chic CFO. Shoot me a DM. I'd love to speak with you. And if you know any other entrepreneur that could benefit from learning about this #1 tax loophole, please share this video. I'd really appreciate it. Talk to you guys soon.